What if one day the paper money in your wallet simply vanished? No more dollar bills, no more coins jingling in your pocket. Instead, everyone in the world started using one currency: Bitcoin. No cash, no banks, no middlemen. Just a global, decentralized, digital currency. Sounds like a science fiction movie. Maybe. But let's imagine what would really happen if Bitcoin took over as the universal form of money. In this video, we'll dive into how Bitcoin could reshape the financial world, from collapsing traditional banking to shifting global power. First things first, Bitcoin is decentralized. That means no single government or central bank controls it. So if Bitcoin were to replace all fiat currencies, we'd effectively have one global currency. What does that mean for daily life? No more currency exchange booths at airports. No more paying conversion fees when buying something online from another country. Whether you're in Tokyo or Toronto, it's the same Bitcoin. This would dramatically simplify international trade, travel, and even freelance work. Imagine hiring someone in Brazil from your home in France and paying them instantly with Bitcoin, without banks or middlemen taking a cut. However, this also introduces a serious challenge. Economic policies, like interest rates or inflation control, wouldn't apply. Governments would lose one of their biggest tools for managing their economies. That shift could lead to a lot of uncertainty, especially in the early stages. 2. Banks become obsolete. You are the bank. With Bitcoin, you don't need a bank to hold your money. You become your own bank. Your wallet is digital, protected by encryption and private keys. Accessible 24/7. No holidays, no hours, no waiting in lines. This freedom is powerful, especially in places where banks are unreliable or corrupt. People gain financial independence, especially those in unbanked regions of the world. But the flip side, there's no safety net. Lose your password or private key, and your funds are gone. Forever. No forgot password button. No customer service hotline. Also, there's no central authority to reverse a payment. If someone scams you, there are no refunds, no chargebacks. It's a double-edged sword. Bitcoin offers full control, but also full responsibility. And what about loans, mortgages, or savings interest? Without banks, those systems would need to be reinvented on blockchain platforms. Decentralized finance. This shift to a self-service financial model could empower people, but it also demands new levels of education and caution. Being your own bank sounds exciting, until you realize there's no one to call if something goes wrong. 3. The volatility problem. Can you buy milk with Bitcoin? Let's talk about a big elephant in the room. Bitcoin's price volatility. One day it's worth $50,000. The next it drops to $35,000. Now imagine buying groceries in this world. Today milk is $2. Tomorrow it might be $6 or 80 cents. That unpredictability makes it incredibly hard to use Bitcoin as a stable currency. This is why many people treat Bitcoin more like digital gold than digital cash. It's great for storing value, but not so great for everyday spending. If Bitcoin were to replace all money, it would need to stabilize significantly. That might require new layers of technology, government regulation, or even pegging Bitcoin to a stable asset. Until then, daily commerce would be chaotic. Salaries, rents, and prices would constantly change, not because of supply and demand, but due to speculative trading. For Bitcoin to go mainstream, it must evolve beyond being an investment asset and become a trusted medium of exchange. Otherwise, your paycheck might lose half its value before you can even spend it. 4. Freedom and privacy. With a dark side, Bitcoin offers freedom. No government can freeze your account. No company can censor your transactions. In countries with strict controls or unstable governments, Bitcoin is a lifeline. It empowers people to send money across borders, or protect their wealth from inflation. But that same freedom can be exploited. It opens the door to illegal activities like money laundering, scams, and even financing terrorism. In a Bitcoin-only world, law enforcement would need entirely new tools to track crime. Privacy coins and untraceable wallets could make it even harder. The line between freedom and responsibility gets very thin. Bitcoin gives power to the people, but with that power comes the risk of abuse. 5. A power shift from banks to code. A world run on Bitcoin would see a massive shift in power, from institutions to individuals, from government-run central banks to open-source code, from human decisions to mathematical algorithms. The role of banks, financial regulators, and even monetary policy would shrink. This shift threatens existing financial structures. Imagine the Federal Reserve or the European Central Bank losing their grip on money supply. Global finance would no longer revolve around Wall Street or national policies, but around decentralized networks. Developers and miners would be the new gatekeepers of money. And power would lie not in politics, but in protocols. But this also raises questions. Who maintains the Bitcoin network? Who fixes bugs? What happens if there's a disagreement in the code? These questions are not theoretical. They've already happened. The Bitcoin versus Bitcoin cash fork. So while Bitcoin offers the promise of a fairer, freer financial world, it also introduces new risks and new powers that we haven't fully reckoned with yet. Replacing money with Bitcoin isn't just a tech upgrade. It's a complete paradigm shift in how we think about value, trust, and control. It offers financial freedom, but demands personal responsibility. It removes middlemen, but opens new doors for misuse. It challenges institutions, but relies on untested systems. So, will Bitcoin replace traditional money? Not today. Maybe not even tomorrow. But make no mistake, change is coming. And the real question is not if Bitcoin will transform money. It's how fast we're heading toward a world where money is just code.